All right, so this is where we picked up from yesterday. Once again, we're going to continue on with receiving payments. Now, exactly just like how we dealt with on Monday when we dealt with pay bills, that's the same function here because in this case, unfortunately, you have no other means to collect money besides the received payments. So in this case, you have no other way to record a payment that you're receiving from your customer. You can't just put it in your check register saying that you received money because your check register is meant for you to record any payments that you've done that's money going out, okay? So with that being said, it's very important that you understand this line of transaction here, or this flow of transaction. So if we created an invoice, then the next thing you have to do is receive a payment. And exactly how we understand vendors is when we enter in a bill, we must follow the line across and pay our bills. Same thing here. We must follow the line here and receive payments, okay? Because the difference between this is what's going to decrease your accounts receivable at the end of the day. So that's why it's very important that you don't add account balances in your customer open balances when you start them off, is because you're saying that these customers owe you, but you're not letting us, the QuickBooks, let QuickBooks know how they owe you. Why do they owe you? Do they owe you multiple invoices, or do they owe you just one? Okay, so that's what's important about this, is that once we enter in our invoices, which we just did yesterday, we entered about 3 invoices. Now we're going to be taking a look at how we follow the line across and we start receiving payments, okay? So, of course, with that being said, here it is. Our first thing is we got to go enter and receive payments through the receive payments window. All right? So, exactly how you enter in an invoice or a sales receipt is going to be the exact same ways that you're able to receive a payment, except there is one additional place you can receive a payment. So this one,
What page are you on?
oh, I forgot to mention that. I am on page 56, 56, 57. Okay. So this is where we left off. So once again, now when I taught you how to enter in a sales receipt or an invoice, I taught you 6 ways. Well, behold this, receiving payments have 7 ways. Okay, even 8 ways if you use the income tracker. Okay, so once again, you have your first one right here on the home page. If you go up to your customers on your menu bar, okay, you have the option to receive payments as well. You also have if you go to the customer center, okay, you have 3 options here, right? New transaction, receive payments, okay? If you have a particular customer like Maria Cruz, you can right click them and receive a payment there too, okay? And also don't forget you have manage transactions down below on each particular person and be able to receive payments there. And once again, if you use the income tracker, you have the manage transactions down below to receive payments. And then, of course, for any invoice here, you can either select them and you can choose the option to receive a payment. Okay, so that's 7 ways. Here's the 8th way. Okay, so if I just go ahead and open up any invoice, so by double clicking on anywhere on the income tracker, notice this. You can have the invoice open, and at the very top of the ribbon up here, you have the option to also record a received payment. So that is 8 ways that you can enter in a transaction through the receive payments window. Okay? 8. All right, so once again, I'm not going to be receiving just one invoice or one payment from one particular person. So I'm just going to go ahead and close all these windows and just get back to the home page. And I'm going to just go ahead and just click on receive payments from the home page. Okay. So here's my customer payment window. All right. So in this case, you have to choose which person that you received a payment from. So most cases, if you open up your mailbox and you open up the letter, the person who sent you the check is going to write their name on there, whatever it is, right? So in this case, let's take a look in our book. This example here tells us that we're going to be receiving a payment from Mr. Bob Mason. Okay, so first thing we got to do is we got to type in Bob Mason, right? There he is, Bob Mason. And what you're going to notice is, boom, it's going to formulate that Mr. Bob Mason owes us 3 total invoices, okay? Now, the check that he sent to us is going to be for the exact amount of $401.39, okay? So from there, we can already tell which check this amount is for. Now, a little tangent here is that sometimes, so I'm going to go a little in between the book, that there are times where if a vendor doesn't, or I'm sorry, if a customer doesn't specify which bill that they're going to be paying for, your best bet is that you're going to treat the check as if it's going to go against the oldest invoice, okay? Where the newer invoices, right, those ones could still be pending for receiving a payment, because you never want to give a customer a discount for a newer item when they haven't even finished paying their older item first, okay, or their older invoice first. So in this case here, we are saying that Mr. Bob Mason is paying for invoice number 3947, okay? Now, here is a rule of thumb here that you have to put in first. You must put in the amount first before you can click on the invoices. Because if I click on the invoices, it's going to give me an error message saying, hey, you need to put in the amount first. And then, okay, I'll click don't show this message again and click yes. So once again, 700 isn't what I want, but they do recommend you not to check mark any of the bills just yet, because the idea is whatever amount that is written on the check is going to validate which invoice they're paying for. So in this case, Mr. Bob Mason is sending me check number 5256. So that's where the check number goes, right? First thing we got to do is we got to make sure that we verify that this person is paying by check, right? A customer they have multiple means of paying their bills off. They can pay us by cash, check, credit card, or they can electronically transfer us money, or they can use whatever means that they want to use, as long as they give us some form of currency. So in this case, right, this check number 5256 is for the amount of for the 401 and 90, is it 90, 39 cents, 39, okay? And we validated it was already a check, and now the date that we received the check is going to be for the 28th of January. Yes.
January.
Okay, so January 28. Okay, there you go. All right. And again, check number 5256. Okay? So again, this check number is going to be whatever check that they've written on, okay? So make sure that you record it, because the best thing that you can do is you're going to be linking this to this. Now, when I put
from 20, sorry.
So again, say
12/28, 2020.
Oh, sorry. Okay, yeah, it's January. My bad. There you go, January 28th. Okay. So now that we have this, right, everything looks great on the screen. Now, notice this. When I typed in 401, $39. It automatically picked up that it's going to automatically pay for this invoice because the check number or the amount on the check matches the total amount on this bill or in this invoice, okay? Now, of course, we could have received a payment from the vendor there, from the customer that they're trying to pay off for this particular invoice. So in this case, everything looks good, everything's verified. All right, and then we can go ahead and click to complete the transaction. Oops. All right. Okay, I don't know why my window's so small these days. Okay, so there you go. I click on, I press enter to verify my transaction, and there it is. What was that?
You save and close?
I saved and closed. Yes, I press enter because it wasn't at the bottom of there. So save and close. So once again, now take a look at my deposits. Now I have 2 pending deposits that I have in my record deposits. Okay. All right. Any questions in regards to that? Now, the accounting behind the scenes is going to tell me that Mr. Bob Mason has made a payment to his invoice. Okay. Okay. Any questions? All right, now we're going to be dealing with partial payments, okay? So let's take a look in our book.
Once the deposit they stay there, so you're gonna have the recorder that every deposit that you do is gonna add another one and another one.
Yes.
Move this number.
Yes. So if you guys remember, it was one earlier because we received our first check our first check from Jerry Perez. Now every time we add in something here, this is gonna just keep growing. Okay, until we make our deposit. Okay.
Thanks.
So now handling partial payments. So in this example, right? This is where it's asking you, well, what happens if a situation is where a customer decides to give you half a payment or a portion of the payment because maybe this month they can't afford to pay off the whole entire amount, or maybe they're planning to make a double payment by paying you half now and then paying the other half later, right? So in this case, right, there is no exercise for it, so I'm going to have you guys pay attention very close to this because I'm just going to do an example here. So if I go ahead and go into my customer center real quick, I'm going to go ahead and locate Anderson Wedding. I'm not quite sure which one I want to do. Looking for invoice number 4003. Okay. And in this case, it says right here. What was that?
Oh, sorry.
So Anderson Wedding, okay, for Kumar and Sati. So that's Sarah and Michael. Kumar. Okay, right here. So if I go ahead and click on them, so they have an account balance with me, right? So if I go ahead and right click them and I say I'm going to record they sent me a partial payment. So if I go ahead and click on this, boom. Here I have it right here. They sent me a check for the invoice of $4,003, okay? Now, the amount that is due is $249.54. So what if one day they sent me a check and they only sent me a check for $100? Now notice this, I put in $100 and I'm going to say this is check number, I don't know, let's say this is check number 4512. I don't know, some kind of random number, right? Now, obviously, they only owe us one invoice. Now notice this, when I put in they only going to be paying $100, you have this little window down here that pops up on here. Now there are two choices, right? You can either receive the payment and then either leave this this as an open invoice or an unpaid, an underpayment. Or two, you could just write off the bad debt right there, saying, okay, well, we got this much money already, so the next thing that we gotta do is we could just continue and write it off. Now, most cases, again, we have to contact them just to make sure that we don't want to write them off just yet, okay? Unless this is the point of our time where we realize that this customer is not going to give us our money back at all. So in this case, I'm going to go ahead and leave it as an underpayment because watch this. This is how smart QuickBooks is. So if I go ahead and leave it as an underpayment, okay, I'm going to go ahead and I don't know what's wrong with my screen. I noticed that I don't have my little titles at the bottom anymore. Okay. So in this case, I'm just going to press my enter key button. Okay. And that should validate that this transaction, right? It's a check. It should now tell me that I'm sorry, I don't know what's going on. So again, I select my account as an underpayment. And in this case, I should be able to press enter. Okay, give me 1 second real quick. Okay, so now we're finally back. Sorry about that, guys. So here, we're under customer payment, right? Here, we're recording that they're only paying me $100, right? I'm going to accept this as an underpayment because I don't want to get too quick to just say they're not going to pay me for the rest of the money. No, right? You have a means to call them up and say, hey, what's going on? Why is it that I'm only receiving a partial payment? And they can say, we're short on money this month, so we'll promise to pay you the remaining amount next week, etc., etc. Whatever reasons that they have, that they sent in a half a credit, whatever it is, an underpayment. So now I'm going to go ahead and click on Save and Close. Now what you're going to notice here is, let's go ahead and take a look at Kumar and Sati one more time. Now notice this, if I go to them and I go ahead and click on all transactions, because right now it's only showing me right there. If I go ahead and click on 403, notice this invoice, look right here. It automatically recognizes that, hey, you already received a partial payment. Now, this invoice is still open. You haven't done anything to it yet. So in this case, right, if we look at this bottom portion right here, we see that the total that they owe me was $249. But here, we did receive a partial payment for $100. However, they still owe me $149.39 or $139.54, excuse me. So here, QuickBooks is very, very smart. They will let you know if you want to apply a partial payment. Here, they automatically calculate for you what the difference is and how you're able to go ahead and receive another payment, and it will go against this amount right here. So, you know, as long as the customer knows how much they owe us still remaining, they write me the check or they use a credit card, whatever payment, whatever method or means of receiving a payment, they'll pay us, and we have right here the amount right here. Now, if you look at your window, it's supposed to say there partial payment on there, but here, because we're working in the current time right now, so it's telling me that this bill or this invoice is past due, all right? That's completely fine. Now, of course, right here is going to also give you kind of information on this side. So again, because of my screen, it will just give you details of what's going on with this bill. Okay. So with that there, I can just go ahead, and that's how you record a partial payment and leaving it as an underpayment. So make sure you toggle between those two little things down there, okay? It's either you record it as an underpayment or you record and you write off the bad debt, okay? Which I will tell you how to write off a bad debt in chapter 3, okay? In case you have those customers that are not willing to pay or something happened to them that they can't afford to pay for the rest, we'll talk about that in chapter 3, okay? So any questions in regards to partial payments?
No.
Okay? So once again, now we're going to go ahead and continue on. So the next section here is going to be handling payments for multiple invoices. So this is a perfect example of how a customer, if they really wanted to, they can go ahead and just pay us off for all the invoices all in one go, okay? Now, it's very common, especially if they know themselves that they've been, getting a lot of service from us. They can have the option to just pay all of us off in one go. So that's exactly what this exercise is going to talk about. So we're going to take a look at Miss Maria Cruz, okay? So Miss Maria Cruz, okay, branch opening specifically. So if I could either go here and look at the invoices there. Now this is looking at invoices one at a time. But if I want to look at all 3 invoices, all I got to do is open up my receive payments window. And from here, I'm going to go ahead and put Maria Cruz branch opening. So then I can pull out all the invoices that Miss Maria Cruz owes me or that I've sent out to her. So in this case, she has used me for 3 different services, right? And here they are. And I billed her or I invoiced her 3 different times. So now Miss Maria Cruz decide to say, you know what, I'm going to just pay off everything that I owe. I'm going to pay off my whole entire account balance. Here, I'm going to pay it off with a credit card. Okay? So how I do that is pretty straightforward, right? First thing I'm going to enter is there she's going to pay me for the full amount of $19.50. Now, no check number is needed there, but usually automatically it's assuming that they're going to be paying by check. In this case, we need to select that they're going to be paying with a credit card. So here we have options here on how we can pay, how Maria Cruz is going to pay us. Now, in your book, can you tell me, is it going to be American Express or is it Visa? It is Visa. Okay. So I'm going to leave my, that it's a Visa credit card. And of course, she's going to give me the validation that we can process her payment through a credit card. So in this case, her credit card number is 123412341234, right? Expiration date is going to be 10/25.
2021.
10/10. Oh, okay. So they did not change this. 10/20/21. Okay. So, and the amount is for $19.50. Isabel, can you mute your microphone, please?
Yes.
Thank you. All right, so then there you go. Once we type everything in, it starts to putting X numbers because, in legally, right, you're only supposed to allow to display the last 4 digits of your credit card number. So in this case, I put in everything like this, and I click done. So now it's going to process the payment and look at that. It automatically highlighted all of the bills, and it's going to pay off all of this, right? So that's how you enter in a credit card transaction. Now, there are a few things that you need to know when you're dealing with a credit card transaction because in this is just us recording it in QuickBooks, okay? When you record it like through the banking system, this is not going to show up. You're not going to be taking this and having it in real life, right? Because in real life, she's probably paying it through an online service or through telephone, okay? And we're just entering the information as is. But what really happens is it's actually being processed to the bank automatically, okay? And we'll talk a little further about this when we talk about making our deposits, okay? So once again, now that I have that, I'm going to go ahead and click Save and Close, okay? All right, so next thing that we have here, so any questions in regards to receiving a credit card payment, but also at the same time, we got to take a look at how you can utilize that credit card payment, or a customer can choose to write a check to pay off all 3 bills. Okay?
No.
So once again, where do the payments go? Again, we all know where the payments go, right? It goes straight to our record deposit section, okay? Now, before I go ahead and go through that, let me go ahead and make sure that I'm going through all of the other stuff. So right here, so for applying payments. In this case, right, QuickBooks will automatically create an undeposited funds account. So if you guys read in a couple pages of before this, right, there's a whole section that talks about what QuickBooks does when you do receive a payment, when you have these customers that pay that you invoice, and then when you receive them, you automatically, it will create an undeposited funds account. Now, this is just talking about if you don't like that happening, you want it to go directly straight to your checking account, you can set up those preferences. But in this case, I'm not going to do it because that's actually not real. That's not true, right? In real life, you're going to be collecting all this money, and what do you got to do? You got to physically go to the bank and deposit it. You can't just assume that all your checks that you receive are just going to go automatically to your bank account. No, that's not how it really works in real life. So in this case, I'm going to skip this section because, once again, if you want to do it this way, if it works best for your company, then do it. And it gives you the steps on how to change those preferences. Okay?
Where the payments going again?
To your undeposited funds. So once again, if we take a look at my home page, okay, where does it go? I received a payment. Where does it go? Right here. This is your undeposited funds.
Record deposit.
Mm-hmm. Okay. So once again, this is another placeholder, and this, I think, is a good idea because in reality, right? We could be holding on the checks forever, and we think that we have money in the bank, but we really don't because we never physically went to the bank and deposited. So in this case, right, you can even record the deposit slips and whatnot and print them out if you want to have them. But in this case, that's just an extra step, and I'll talk about that in a few minutes. Okay. So any questions here?
No.
I have a quick question.
Go for it.
Oh, now on the credit card, is there a spot for like approval numbers, or is that just?
It depends on the business. Yes, you should have a spot for the CCV code, or the whatever it could be, CCV, or some of them are SSV. They do have it, but in this one, I don't know why they don't have it here. But if you look at the when you set up the customer, they have a section that asks what a CCV code is and why you cannot hold on to that number.
Oh no, not that number. The approval number. You know, after sometimes they give you an approval number. Does QuickBook issue one, or is it you running the credit card off a different machine?
Oh, I see. I see what you mean. Like, once, like, how do you know if the transaction has been validated, right?
Yes.
Okay, so once again, this is QuickBooks, not the bank.
Okay.
So for any
It's just record keeping. Okay.
yeah. So in this case, if a credit card transaction bounces, your bank's going to be the one that knows that.
Okay.
And the bank's going to have to let you know, hey, your customer attempted to make a payment, but it bounced back. Or you're going to find out by looking, when you do your bank reconciliation, that's going to be one of the things that you would do. And you'll find out that, hey, the customer payment has bounced back, or their check has bounced back. Okay? And that section's going to be in chapter 5. Okay? So no, unfortunately, there is no way unless you use the bank feeds option, which is going to be talked in chapter 5, which allows you to connect your bank feeds. So anything to connect your actual bank account with QuickBooks, giving QuickBooks permission to have access to your bank account, so that for any notifications, such as a customer decides to pay for something and it bounces, it will notify the bank, and the bank's going to notify QuickBooks, and QuickBooks is going to notify you. Okay, so there are many ways, but that just makes it even more dangerous for to use QuickBooks, because now Intuit, not only do they have access to your bank account, they have access to everything. So you definitely want to pick and choose what you think is appropriate for QuickBooks to hold all the information. Okay, but yes. Well, okay. Any other questions? Okay, now the next one is going to be considering recording customer discounts. So, for this one is more geared towards when we give our customers discounts or in this case, when we give them terms, okay? So, this is only applied for when we provide terms to a customer, okay? Because we talked about how to apply a discount earlier when there's, for example, an in-store discount. You're supposed to write it on the sales receipt or sales form, and then you continue on receiving the payment there. But in this case, when we give our customers terms, we're giving them an incentive to pay us as soon as possible, and by them paying us for the amount, we can give them basically a discount to kind of, give them a means to just pay us back a lot quicker. So terms as we know it, right? So if we gave Mr. Bob Mason, we gave him a 2% 10 net 30 terms. So this is the issue. What happens when when Mr. Bob Mason decides to go ahead and pay for his invoice, and he wants to take advantage of of the discount that we gave him. So in this case, I'm going to go ahead and show you how to do that. Now, it's very, very similar to how we enter in a vendor credit, okay, or in this case, we only learned about vendor credits, right? And how we apply them onto our bills. That's the same idea here, except this time we're going to be in the receive payments window. Now, let's take a look at this. When we're in this window, okay, and I decide to say that Mr. Bob Mason, okay, he wants to pay, I believe, for invoice number, I think he's paying for invoice number 104. Let's double check in the book. Okay, so customer discounts. The date's going to be January 31st, and it's going to be for $151.45. So he's definitely paying for the this invoice right here, number 106. So excuse me for that. So again, he wants to apply a discount, the 2% discount, because he wants to pay for this invoice right here. So let's go ahead and fill in that this is that he's making a payment on January 31st, and now we need to apply the discount. Now, how do we do that if we want to apply it to this invoice right here? Okay. Now, because we know by giving him the terms, right? You can always pop up the invoice to see what terms that we gave this customer at any given time, right? But in this case, we know that we gave him a 2% 10 net 30. Now, in this case, we invoiced him on the 27th. He's choosing to pay 4 days later. So he's definitely making it within the discount period of 10 days. So what you're going to do is at the very, very top of the window, you're going to see that there's a little box that says discounts and credits, right? If I go ahead and click on this window, I'm going to be looking at this discount window, which is going to tell me, well, hey, you're right. Mr. Bob Mason, it did pay within terms, and he is going to be getting a 2% discount, which it's already been calculated for you. All right? That means Mr. Bob Mason is going to take a $3 discount off of this particular invoice, okay? Now, there are a few things that you need to add in here, such as, well, what's the discount discount account going to be? In this case, pretty straightforward. It's a sales discount, okay? And what class does he belong into? So in this case, I want to make sure I separate it because we originally invoiced him for the San Jose location. So therefore, this discount's going to apply. And since it's to Bob Mason, it's going to be directly correlated to San Jose location. So once I have this all figured out, right, I'm going to go ahead and click on done, which now that's going to apply the amount to this invoice. So now this person, for this invoice, it's only for $151.45. And that's the exact amount that the check is written out for. Okay, and this, let me go ahead and see which check number he wrote to us. Okay, he wrote this to be, okay, I don't have the check number on my, oh yeah, check number 5912. Okay. 5912 is the check number that he sent, and he wants to take advantage of the discount. So once again, this number, right, you're going to take a look at the check itself, right, and he's paying with a check. Okay. You're going to take a look at the amount that the check is written out for. You're going to type it in here, and then obviously he wants to take a discount off of this particular invoice right here. So he wrote it for the less amount. Okay, so he wrote it under the $154.54. So in this case, we applied the discount. Now, here's one thing that you have to know. In this case, unfortunately, QuickBooks is not gonna determine to you what the discount is. It's not gonna keep track of the discount for you. It's not gonna flag you down saying, "Hey, this person has a discount." No, once you type in that it was $154.45, it's going to pop up saying it's an underpayment. You have to manually add the discount in there for QuickBooks to know, okay, the customer is taking a discount, okay? So that's number one rule here is that when you are looking at discounts, you have to manually apply them. It's not going to be automatically calculated or applied for you. You have to apply it, okay? So once we have that, we can now go ahead and click Save and Close. So boom. Now we have a total of 5 payments made into our record deposits section. So any questions there? Okay. All right. So, of course, now that we completed understanding how we create our invoices, creating our sales receipt, we got to take a look at how we receive our payments, okay, and how to apply discounts if needed, okay. So now the next section is going to be recording your deposit. So as you can see here, right, every deposit or every payment that you receive from a customer, it's going to automatically flag for you right here saying, hey, you have 5 pending payments that you need to take to the bank. Okay? So oftentimes, it's not ideal for a business to just keep leaving the business and just to go in and deposit a check the minute they receive it. That's not ideal. Usually what typically happens is it's the deposit either happens either the next day or it happens at the very end of the day. Now, in most cases, a lot of banks nowadays, they close at 5 or 6 o'clock. So most businesses are 8 to 5 or even 8 to 6, depending on what it is. So with that being a contributing factor, that's why sometimes, oftentimes, a lot of businesses, they go the next day between lunch because they are guaranteed that that money is going to be processed that very same day or that very same night. Versus going to deposit the bank after work and have to wait till the next day happens and then either the check clears or not. Okay, so there's lots of rules and regulations that you have to understand when you're making your bank deposits. Now, here's another factor here. Now, if I go ahead and click on my record deposits, here it tells me here the list of the money that you received from every single customer. Okay, so in this case, we did receive 4 checks, right? I made that one from Anderson Wedding, right? I made that $100 extra payment there, so this will not match your book. But we also received 1 credit card payment. Okay, now in this case, this make a payment window is very crucial that you stay focused on, because in this case, we need to filter out our money according by the type. Okay, so if you received actual cash, obviously the cash is going to go directly to the bank, or the cash is going to be received you have to deposit the money into the bank. Now, what they do recommend you to is to separate your cash and your checks, okay? And any other means, if there's an electronic funds transfer, that must be separate. If it's any credit card per se, it has to be separated, okay? Now, I'm going to tell you why. The reason why we have to keep our cash and our checks separate is because, cash and checks separate from our credit cards is because, as we know, when we deposit cash and our checks, right, that right there, 100% of that money is actually our money, okay? Whereas if we actually have someone who paid with a credit card, as a business owner, you need to know this, because if you are thinking about possibly having your own business, if you are looking into accepting credit cards, you need to know it comes with a price. Okay? Now, it's not the price of the machine that you have to buy in order for you to be able to swipe the card. No. It's the fact that you are asking a credit card debt collecting company to get the money for you in advance from the customer, because now what this essentially is doing here is that because the customer that's using the credit card, they owe the credit card now. They don't owe the company. So what you're doing here is basically what you're having is the credit card company is going to be acting as if they are in charge of your accounts receivable. As in, they're going to take the debt off of your hands and they're going to make a payment ahead for you. So then that means the customer is not responsible to pay you anymore. They're responsible to pay the credit card company. All right? And because of that means, so if just like Maria Cruz, she owes me $1,950, that's a lot of money. So because of that, what these credit card debt collecting companies, right? We all know who Visa is and we all know who MasterCard is. That's where they make the most money, because a lot of companies, they need the money instantly. They need the money as soon as possible. They can't wait for a customer to pay within 30 days because again, the fact that you're allowing a customer to even owe you in the first place is a huge risk to a business because you always have that 5% risk chance that that person is going to fault on their payment because you don't know what their given circumstances, what their financial status is, what bills that they have to pay. Nobody knows. All right? And it's not your job to keep track of it. Your job is to sell a product and a service. So in this case, right, because of that idea, that's why credit card companies, they charge, and it depends, right? Depends on what the agreement is. There's two ways that you can have an agreement with them. You can either say, I will give you a percentage of my sales, okay? Because you're collecting the money for me and you're giving me a cash advance, basically. So then I can continue doing my business. And by doing that, you have to sacrifice either a percentage of your sales or it could be a flat credit card fee. Okay? So most cases, right? That's why when you do use credit cards or when you do have the option for customers to use credit cards, that's why there's always that interest fee or that convenience charge for using a credit card, or there's always that means of that portion of the money, or sometimes they charge by percentage. Okay? Because again, if the person's only paying $50, you don't want them to pay a flat rate of $5 when it could be just a simple like 2% of the sales. So then it's less than that, right? So it just depends on what kind of company you are. Now, most cases, a lot of the companies and a lot of the corporations out there, it's based on a percentage. But for smaller businesses, they can get away with just paying a small flat rate because you don't use the credit card very often. Okay? So once again, that's going to be between you, the credit lender, and the bank. Okay? And once again, all of this is going to be tied to the bank because the bank, when you charge when you charge a credit card, it's going to automatically deposit straight to your bank. It's not going to go into your pocket. It's not going to go to QuickBooks. It's going to go straight to your bank account. So once again, all of those agreements are going to be through your bank. And that's the one reason why you need to separate your credit card transactions because in reality, Miss Maria Cruz says that she's paying the invoice off for $19.50, but she's using a credit card because you accept it. You're not getting that whole entire $19.50. You have to pay a price for having Visa allow Visa to be accepted as part of the payment for your services. So with that being said, I'm going to go ahead and, of course, with this, we can tell which ones are checks and which ones are my credit card, right? But think about a company that's dealing with 1 million clients and making payments every single day. So in this case, it's just much easier if you could just go ahead and go to the top in here and filter it so then you select all the correct ones. So in this case, I want to select all of my checks and all my checks and stuff here. Now, I believe you could. There was a way that you could check all of them, but in this case, I'm just gonna go ahead and check the ones that I have here. I think it's one of these buttons up here. But yeah, so I only have foreign payments, so I'm okay with that. So now that I validated that I have all of these payments that are going to go through, and these are all my checks that I received, I'm going to go ahead and click OK. And what you're going to notice here is this is now your deposit slip. Your deposit slip will always be usually whenever you decide to deposit your bank, deposit all these checks to the bank. Now again, all of these customers, clients, right? They could have made payments here and there throughout the week. Now, ideally, most companies and most companies, they usually do it on the daily. They don't wait till the end of the week. But again, smaller businesses that don't have the means to go to the bank all the time, they usually save it off to the end of the week and then they just deposit it all in one go. It just depends on how often your company wants to do it. So once again, it's going to be to your checking account. the date is there, and you're going to make a deposit. Okay? So now, here's a few things that you can also do here. So now that I see here, it gives you pretty much who made the payment, what account are you going to be taking this out from. So once again, this is from the undeposited funds, and it's going to go to my checking account. Okay? And once again, it's going to give you pretty much details of what they are if you placed a memo on there, but some of them I didn't. And then again, the check number, right? And the amounts are going to be all there. So what you're going to be noticing at the very bottom here is the total amount that is going to be deposited. Okay. Now this is the section where you can also add in any other additional checks or any additional money, because as a company, right, you can invest in your own company, you can add in extra loose change or whatever means it is, right? You can modify this deposit screen as you please. Okay, so in this case, I'm going to show you one more thing here is that, well, in this case, the boss decides to invest a little bit more of his money into the company. So what I'm going to do here is I'm going to go ahead and have this account saying that the owner is going to deposit extra money in here. Now in this case, I can't remember what the account number is, but investment? Nope. In your book, it should tell you what account number it is. So this is modifying the deposits window. Okay, so let's see here. Okay, on owner's contribution. Yes, that's correct. Okay, so now the owner is going to contribute some extra money. He's going to invest his own money. So there it is, owner's contribution. And notice this is part of an equity account because again, he's adding money to the company. He is adding value to the company, right? The memo here could be owner's investment, okay? Okay. And then in this case, he actually put in a check that he wrote himself to place it into the, to contribute to the company. So in this case, this is check number, it says right here, 13451. Okay, 13451. And once again, he is using a check. Okay, and it's going to be, again, there is no location for it because this is for the general company itself. So there's no, I'm not saying a portion of the money is going to go to San Jose and a portion of the money is going to go to Walnut Creek. It's all going to go to the company in general. So in this case, you don't need to split up where the money is going to go. And in this case, he's going to be investing, he's going to be investing a total of $15,000. Okay, $15,000. Okay, so now that brings my whole entire cash value up to $16,121.87. Okay, and that's what you can do here. When you can modify, you can add extra stuff in here. So if you need to add your cash in here, go ahead and add your cash in here, right? This is the window for it. Okay. Then we're going to take a look at the bottom half of this section down here. Now this section is for if your company needs cash for some reason, cash on hand. So this right here is going to be the cash back section. Now oftentimes, a lot of the times that you would use this section for is if you have a petty cash drawer, right, for minor expenses, or a great example is if you have an in-store cash register. If you're the in-store person and you need cash back, this is the place that you need to place it in there. Okay, so every account that you're going to place the money into, you're going to designate it to that specific account. So if you have a petty cash account, then it's going to go directly to your petty cash. But in this case, I don't have one. I didn't create one because I don't have the means or the I don't need one. So in this case, that's where exactly what you're going to do is if you have that type of account where you need to have loose change or some kind of cash available, that's what you're going to fill this information for. You're going to designate the account that you need it for. And then again, you're going to have the cashback memo for whatever it is and how much you're going to be taking out to put into that account. In this case, I don't need it. All right. So now I can go ahead and save and close. Okay. Now let's take a look at this. If I go to my check register, okay. Come on now, check register. Okay. And I go to my checking account and I click OK. Notice this. My account balance is now $27,000. Okay. And look at this. It clearly says that this is a deposit, right? And it's been split. Okay, awesome. Now, of course, if I go ahead and click on this deposit, it's going to show me that same exact window that I just computed, right? And this window allows you can print out this deposit slip. You could do a lot of things here, all right? But I'm not going to show you how or anything like that. It's pretty straightforward, right? You just print right here. Okay, if you want to print this deposit slip so you can have it for your records, boom, it's there. Okay, straightforward, pretty easy. And that's how you make a deposit for cash, checks, etc., etc. Okay, any questions there?
What are you doing with your credit card deposit?
We're going to talk about that right now.
Oh, okay. Sorry.
No worries. Okay. So any questions in regards to just depositing the cash or the check side?
I have one question.
Mm-hmm.
When I click all type of 1 second. This the step 3, when I click cash and check from the view payment,
Mm-hmm.
it say that I don't have no payment. The message says you don't have a payment, so it don't allow me.
That's going to be something that I have to work on you individually because if you didn't record any of your payments at all, then that's the reason why you don't have anything in your deposits. So that's why I kept checking over and over that every time you click and validate that you have received a payment, it should automatically go straight to your record deposits.
Mm-hmm.
Okay. If you're at that window, so let's go ahead and exit at this thing right here. Since I'm going to be doing my credit card. If I click on this and you're on this window right here and you're trying to find all of your payments and you're looking at all types, you should see a list of all of the payments that you have. Now, if you exit out this window, then that's why you have nothing here.
I see three items there: Bob, Maria, and Bob.
Did you check mark them?
I did. Afterwards, I did, and I click it.
Did-
Type, and it still say check, cash and check, right? It still say you have not received any payment on this type of deposit, to deposit.
Okay, so whatever that you're clicking for account type, so then that means when you record the payment, you didn't record it as a check, you recorded something else.
Exactly. Yes. Okay, thank you.
Mm-hmm. So if you go to all types, you should see them all. But that means right here, where it says right here, I have the payment, it says right here, Visa. So if yours says something else that's not a check, then you recorded it wrong. You recorded it as cash, or you recorded it as a credit card, or you recorded it as an EFT. I don't know from there. So you have to remember that we were very specific that you had to click on check for it to be a check. Okay, so there we are. So now, once again, now we're going to be dealing with our credit cards. Now, it depends on what the credit card service that you're using, right? If it's a Visa or MasterCard, usually they have the same rates. But if it's American Express or the other types of credit cards, so I can't remember what other ones are out there. I think First Bank is one of them. U.S. Bank is a different one. So whatever kinds of means that you use a credit card company to, accept. So the more common ones is, as we know, Visa, MasterCard. We know that that is standard for all our businesses, but there are a few businesses that accept American Express. So we know that for sure that American Express, since it's not a widely used company, they might have a different rating that you may agree to. So in that case, you may want to have to keep everything separate because just the way that your agreements are with these companies. So in this case, my Visa, I'm just going to keep it at all because I only have one transaction anyway. So I'm going to go ahead and, yes.
Can I ask you something? What about all of the online banks and all of this kind of stuff, like PayPal and all of this?
All of those are also going to have, I believe Square is free. PayPal, it depends on what it is. So PayPal, they do.
Yes, it's a bank.
Yes.
You have a lot of banks online, so that you open an account on these banks, so it's not with Visa or no, I don't know what it is. I'm not sure.
Oh, okay. Yes. So Square and what was it? PayPal. Those are all newer types of electronic funds transfers. Square, Cash App, Venmo,
Yes.
all of those are going to be those are all newer banks that are available right now that you can use to transfer money. It's all electronics. In this case, I'm not going to teach you that just because right now not everybody uses electronic funds transfers, especially Square. Square allows you to accept credit cards as well.
Yes.
Okay? All right. So now here, back to this. We're here on all types. Okay, there you go. My one payment is for Visa, and I'm going to go ahead and click OK. So now here it is, right? Here is my Visa, and I can't deposit it for the $19.50 because that's not true. If you could also check up your bank statement too, because it's going to tell you that you got charged a bank service fee because you had the bank process a credit card payment transfer. So in this case, right, depending on what the agreement is, what your terms are, I believe depending on what it is, whether it's Visa, MasterCard, or American Express, if you agree that they can take a percentage cut of your sales, then in QuickBooks, you're not getting the full $19.50, and you're going to match that against your bank reconciliation, right? Your bank statement. When you reconcile your bank into your cash ledger, you're going to see, well, why did my credit card transfer payment from a customer, I only received a portion of the money instead of all $19.50, and that's because on your side of the books, you didn't calculate that percentage that you agreed to even have Visa and MasterCard accept payments. So in this case, right, we need to make sure that this is that we have to calculate on our end. Now, once again, you definitely want to make sure that you are for sure of exactly how much of your bank service charge that you're going to be accumulating, especially if you're responsible for collecting all this money and you are allowing credit cards to happen. So once again, you have to be sure how much they're going to be charging you. You definitely don't want to just deposit it and then have to do an adjustment entry to kind of undo some of those things to pay for those service charges, because at the end of the day, the bank is already going to charge you for that. So you're going to end up double charging yourself. So that is one thing that you need to make sure. So in order to do that, this is what you can do here. Okay, I'm gonna go ahead and for this one, I know for a fact that Visa is going to be charging me interest. So I believe this is going to be, I don't think it's interest expense. What was it? Is it interest expense that this account is? Or is it a bank fees charge? Let's see. Merchant, it's called merchant service fees. Okay.
What page are you on right now?
72.
72. Okay, thank you.
Okay, perfect. Making bank deposits. Okay, we're already here. So you said page 72. Yes. Okay, so we're looking at entering in our credit card transaction. Okay, or depositing our credit card. So in this case, we're calculating the the amount of interest that I'm going to be charged, or for the bank service charge. So in this case, the account for this one is going to be merchant service charges. Okay, so again, you could put in whatever memo that you want to put in here. So I'm going to say Visa merchant. Isabel, can you turn off your mic? Can you mute yourself, please? Okay.
Yeah, sure.
Merchant charges. Okay, you could say 2%, whatever it is right here. I don't remember what it says, but I think it says it just says merchant service charges. Okay, and then once again, in this case, now it's going to ask you to do what's called quick math. Okay, so quick math is a new feature that you can do in the actual cell, or in this case, the actual form itself. You can actually do math calculations right here directly into the form. So this is how you activate it. Pretty straightforward, right? In order to activate it, you just start typing your number in. So this is the number I want to start, right? The minute you start adding any symbol, so a plus sign, minus sign, multiplication, that's what's going to activate your quick math, okay? And how are you going to tell if your quick math is going to be activated is it's going to start pulling up a receipt scroll paper, okay? So really cute, really innovative here, but that's what they want to do. They want you to calculate your amount here. So by activating it, you just put in your number and having one of those symbols, whether it's a plus, minus, multiply, or divide. Here I put multiply. Now here it says that that Visa's going to charge me 2% of my sales. Now here is something that you need to know. If I go ahead and just put 2%, right? And this is where it's safe to go ahead and press enter. If I do that, now I'm going to be charged $39 even. Now notice this, it's a positive number. And notice this, now I'm going to be depositing $19.89. No, that's not right. So in this case, what I have to do here is I have to remember when I enter in my my percentage, I have to enter it in as a negative number. So it has to be negative 0.2. Okay? And then on my page, it's going to now show me that it is going to subtract $39 of merchant service fees, and it's going to calculate it at the bottom. So then now the deposit that I make is now going to only be for $19 and $11. Okay? $1,911 opposed to $19.50. So that is how we use quick math, and this is how we also keep track of our records, because once again, our bank statement's going to show this exact calculation right here, and you're going to wonder, why is my bank not matching my check? It's because you need to remember, if you're going to be using a credit card to accept customer payments, you have to also pay a certain percentage of your sales for you to collect the money. So in this case, I have to pay $39 to Visa for collecting this money for me. And I'm only going to be receiving 97% of my sales. Okay? So that is how we deposit credit cards. Okay? And once again, save and close. And here, I go back to my check register and I'm going to notice this. Here, my check or my deposit was for the 1911. Okay? Any questions there?
No.
I don't think so.
Okay. All right. So, last section we have here is just going to be looking at reports. So, as I've mentioned from yesterday, reports are going to be based on the position that you have in the company. So, in this case, anything that has to do with the sales is going to be here. Okay. Okay, so once again, all of these reports are going to go all after about about sales, about accounts receivable, etc., etc. I'm not going to go over a lot of this because once again, these are pretty straightforward, pretty standard types of reports that you can do. And if you just keep reading the book will tell you a little synopsis or a little piece of information about the reports that you can do as a sales representative. But once again, we're looking into this class as if we are not the sales representative, but that we're looking at all of the positions in a company. So in this case, right, just by going up to the reports menu bar, and you scroll down to customers and receivables, okay? I'm sorry, customers. If you go up to customers, I can't find it. So I have company, processing, I'm on company and financials, customers and receivables. Here is going to be the list of everything that you can do if you are a sales representative, right? Oh, well, I'm sorry. If you're dealing with just customers and their accounts payable, right? Then you have your sales reports that you can do, right? So for example, right, I can check out what my sales is by customer, right? Seeing what do my customers like to purchase. I can run a report on basically sales against my items, right? If I do this, then I can see which service or which product do I actually sell more of, right? I can even go as far as looking at I could do it by class, right? Because that will tell me, which store is doing better. Okay, there's many reports that you can do here, and again, all of these reports are just going to be based off of what kind of question you are trying to answer. Okay. So, yeah. And then accounts receivable. So once again, if you're interested in looking at how often your customers pay you, okay, or how often you invoice a customer and et cetera, et cetera. So once again, all of these are going to be subjective of what kind of question you are asking and what kind of graph or what kind of report can help you answer that question. So again, this chapter was dealing with accounts receivable and dealing with sales. So once again, there you have it. These are the reports that you can do for the position of a sales representative. Okay. All right. So now that is all there and done. Any questions in chapter 2?
None here. Anybody else?
I'm good.
I'm good too.
Okay, so let's go ahead and dive right into the multiple choice and fill in the blank. So here we go. Number 1. Okay, make sure you're selecting the best answer. So number 1, okay, in the new customer window, okay, you'll find everything except
D.
D, okay, year to date sales information. Yes, right? We talked about what it is. In order for you to find the year to date sales information, you do have to run a report. Okay, it's not going to be visibly displayed or I'm sorry, I'm thinking about the customer center. I'm sorry. This is the new customer window. When you enter in a new customer, you're not going to have the year to date information. No. Okay. Number 2, okay, you should record a sales receipt when the customer pays okay, by cash, check, or credit card at time of sale. So that's the key word here is they pay at the time of sale. Okay. Number 3, which statement is false?
B.
B. Number 3 is, yes, B. Okay. Invoices decrease accounts receivable.
Is that B or D? D is in dog.
B as in boy.
B is in boy. Okay.
Okay. Invoice that is false, right? Invoices actually increase accounts receivable, right? It increases the amount that people owe you. Right? Letter A says invoices are very similar to sales receipts. That is true. Okay. C says that sales receipts have no effect on accounts receivable. That is true because people are not owing you money. They're paying at time of service or at time of sale. So no effect on accounts receivable. And last but not least, D says invoices should be created when customers are going to pay after the date. Yes, right? Invoices are when customers pay after the bill. Yes, and that's true. Number 4, okay, you may specify payment terms on the new customer window. However,
Is D.
D, you are also permitted to override the terms on each sales form. So yes, okay, that is true because we've seen it before, right? If for some reason there's a special sale today or I want to give this person a special discount, even though I set it in my customer window, I can always override it when we do the actual customer form itself, when we invoice them. You can always change any piece of information at any given time. Okay, it's not set in stone. Okay. All right, question number 5. Okay, number 5 says, okay, your company has just accepted a payment for an invoice. Okay, what should you do?
D.
Yes.
D, receive the payment by clicking on receive payments is correct. Okay. All right, number 6, okay, which statement is false? So once again,
Is it B?
B as in boy or D as in
B
dog?
as in boy.
B as in boy. The PO number helps the customer identify your invoice.
That's true.
That is true.
That is true.
C.
C, PO numbers is required on all invoices. Now, purchase orders. Okay, so this is kind of weird because purchase orders are actually meant for vendors. Okay, that's the difference between a purchase order and a sales order. But in this context, it's looking at the customer's point of view. Okay, because they're sending in a purchase order. Now, in this case, are all customers obligated to have a purchase order?
No.
No. So that is why this is not true. Okay. Number 7. To record a deposit in QuickBooks,
D.
D, all of the above is actually not right. Okay. Okay. Any other tries? Any other guesses?
Is it C?
C, make sure that each deposit totals matches the bank feed or the bank statement. Now, in this case, we didn't even talk about bank reconciliations yet, so I don't know why they asked this question. But C is going to be definitely what you want to make sure because, again, you're going to the bank and depositing this money. So you're obligated to make sure that your bank deposit slip matches as well. Okay, so let's
D is
see.
the answer.
D is D?
7 for 7, right?
Yeah. I have it as C.
C, right?
C, right?
Okay,
I
hold
don't
on.
understand. Make the separate deposit that include both checks and cash is right, no? That's what you said.
Okay, yeah, that is right. So make a separate deposit for that includes both Visa and MasterCard receipts. Okay, so to record a deposit in QuickBooks. Yeah,
So
A.
it is D.
Okay, so the book is wrong here. All right.
In my book, the answer was D also. When I, because I go over the questions and then I look for the answers. And yeah,
Okay, so I have it in my book. It says it's C, but I do after reading all the answers. You're right. D is the correct answer. Because that's what they recommend you to do is to separate your checks and then do your credit cards and then match your bank statement. Okay, so yeah, D is actually the correct, unless this is asking if this statement is false, but I don't know. But yeah, anyway, C7 is actually D. You are right. Okay. Number 8. Okay, your company has just received an order from a customer. Okay, who will pay within 30 days. Okay, how should you record this transaction in QuickBooks?
B.
A.
A is the correct answer. Yeah, you're going to create an invoice by clicking the Create Invoices button on the home page. So in this case, the question here is asking that the customer, you just received an order and they're for surely going to pay within 30 days. So they're going to make sure that they are going to pay you in 30 days, right? So in this case, this is recording an invoice because this customer wants service from us, but they're not going to pay us right then and there. They said they can pay us within 30 days. So it's going to definitely be after the time of sale. So in this case, you are going to be creating an invoice for this one. Sales receipt is if they pay right then and there. They're agreeing that they will pay you within 30 days. Okay, so B, once again, is a sales receipt, which just means they're paying right then and there. Okay. Number 9, okay, when you make a deposit, all of the following are true except You must print a deposit slip in order to process a deposit. Not in QuickBooks.
So D's not correct too, because you should create a deposit that matches your bank statement.
You should create a deposit.
I think it's B.
So you cannot create a deposit slip on.
Wait, hold on. What number are we on?
9.
9. Okay, hold on. The question is, which of the following is true except... Oh, okay. Yeah. Okay, A. Sorry. I was looking for which one was true. Okay, so A is correct because, yes, you're not obligated to have to print out a deposit slip before you can do a deposit, right? Because, again, your QuickBooks is separate from your bank. So QuickBooks is just to make sure you record your business transactions correctly. Now, whatever the bank does, they're going to print you a deposit slip regardless whether you have it for QuickBooks or not. So in this case, what is not true is that you don't need to print a deposit slip in order for you to make a deposit. You just go to the bank and they will do it for you and they will give you a deposit slip. Okay? Now, yes, you could go into QuickBooks and make a note to it, add it in the memo saying that this is deposit slip X, whatever it is, just so then you can keep track of it. But in this case, that's not true. You don't need to print out a deposit slip. They provide one for you. Okay. Number 10. Which statement is true in regards to calculating items? B as in boy. A calculating item always calculates the amount of all the lines above it. Now we took a look at an example of that. Is that true? What did I have to do to that one invoice to calculate the discount item to represent that I want to take a discount for the entire amount?
You did D. Calculate.
You did D. Calculate the items using the amount on the preceding line. That's
Yeah.
correct. It only calculates the line above it. Okay? So D is the correct answer.
Mhm.
Number 11. When creating a customer record, okay, which statement is false?
D.
Okay, number 11. D as in dog?
Yes.
No.
No. We're creating 2 records, one for the vendor and never mind.
A. Okay, so let me say it.
C.
C is the correct answer. Okay. So a sales rep must be selected when creating a new customer. Is that true?
No.
No. You don't even have to, you're not obligated to have a sales representative take care of your customer, right? So in this case, C is the C is the correct answer in this one because it's looking for what is false. Right. Number 12, okay? When receiving payments from a customer to whom you have sent invoices, you must C. Enter the payment into the receive payments window. Yes, because that's the only way. If you're increasing accounts receivable by entering in an invoice, that's the only way you're able to decrease accounts receivable if you use the receive payments window. And in this case, that's your only option. Right? You can't be writing a check and saying, I'm depositing it into my bank account. No, that's not how it works. Okay? Number 13, okay? You need to calculate the amount of a bank card fee by multiplying the amount on the received payments by 1%, or in this case, it's negative 1%, what useful QuickBooks feature could you use? So again, we just saw this one. So B, yes, quick math, right?
Yes.
Yes, we saw that, right? By using the little thing. Number 14, all right? The undeposited funds account tracks what?
B, funds that have been received but not deposited.
Correct. B, funds that have been received but not deposited, right? Hence the word undeposited funds. All right, last but not least, number 15. Okay, after entering an existing customer into QuickBooks / job field, okay, of an invoice, a customer's / job not found, okay, dialog box appears, and it says that this customer is not on the customer list. What should you do?
Quick add,
A.
fit add.
Number 15. Click the quick add button to add the customer to the customer list. Okay. Let me see. Click the setup button to enter in the customer's information. Click cancel to. Okay, so click the cancel to check the name of your that you entered into the customer list for typos or. Okay, so this is a weird question. Let me ask this question again. So after entering an existing customer in in the customer / jobs field, and then the not found customer job in the dialog box pops up. Okay. In this case,
Wouldn't it be C?
it's
You don't enter
it.
a customer that exists is dead yet.
Okay. Now,
If you put it 2 times, it's 2 times. Or it's gonna tell you, the computer's gonna tell you this customer is exists yet, no? So
okay,
Oh, yeah, it's C.
it is definitely C because in this case, that's right. If you read it again carefully, the key word we have here is after entering an existing customer. So that means this person already is on your customer list, but you can't find it. That means you need to press cancel because you might have entered in a typo. So C is the correct answer. Okay. After reading it twice, that is correct. C is the correct answer. Okay. Let me see. Let's just take one more minute to just go through the complete the statement. So number 1. All right, a new customer can be added to the customer list without an opening balance, okay, in the new customer window by clicking blank after entering the new customer name.
Quick add.
Quick add, yes, quick add is correct. Number 2, okay, when you create a sales receipt, QuickBooks increases, okay, by a debit, a blank account. What does it increase? A bank account, good.
Undeposited.
Or it, yes, good. Or it, yes, there you go, good. Sorry, I didn't finish reading the question. Number 3, okay, discounts and subtotals are called blank items.
Calculating.
Calculating is correct, but in this case, when we talk about items itself, I wouldn't refer them as calculating items. But yes, they are calculating items because in terms of putting them on the sales receipts or invoices, they do calculate. All right. Number 4, okay? Receiving payments reduce the balance in blank, all right, and increases the balance in the undeposited funds or a bank account.
Accounts receivable.
Accounts receivable. And last but not least, blank helps you add, subtract, multiply, and divide numbers. Okay.
Quick
in
math.
quick math, yes. All right. All right, good. It is now 3:15, so go ahead and take a nice 15-minute break. So I'll give you an extra couple minutes, so please be back no later than 3:32.
Just one question.
Yes.
You said we're going on the chapter 3 or 13?
3.
3? Okay.